Kospi is up 1.6%. We have something like a Shanghai, which is up 0.2%.
This was the second big, visit and second big call that he had made.
The coming year will have a revenue of about $30 billion.
So 40-day exponential is about roughly 21,400 is that level. A break below that will give us a confirmation one way or the other.
The Nifty mid-cap index is now at a fresh record high.
You see thermal business in some of the stocks should also continue to enjoy a re-rating.
CRC yesterday, this is a document dated 6th Feb, has gone ahead and said that now we will take one step forward.
The Nifty and the Sensex are holding up with a gain of close to about 0.2%.
I've not seen a general purpose technology like this.
Sales grew by 9%. We're working with a number upwards of 10 to 11%.
Well, sources are indicating to us that the government is likely to soften its stand on the retrospective GST demand notices that was sent to online gaming companies.
Markets continue to remain quite volatile. Very earnings-heavy season is what we are seeing at this point of time.
Good eye. Well, that's the day so far. You're with us here on another edition of Closing Bell. We are coming to you live, as always, from the CNBC-TV18 Motilal studios. And it's the three of us today. I'm Prashant. With me, my colleagues, Surabhi and Rima. Guys, hi, afternoon.
Afternoon, folks. So I guess it's one of those days where you're kind of ambling along, indices, not sure of what's going on. But look at individual stock action. I mean, I was just looking at Trent's numbers and the reaction to Trent.
Yeah.
So you have to go beyond the index today to figure out where the real headlines are, I guess.
Absolutely. So it's, almost a violent reaction, right? In a good way.
And after the stock has rallied 200%, that's the kind of performance they're putting up.
Absolutely. And, that's absolutely right, because at the index level, there isn't very much by way of conviction. And it's been, it's neither breaking down, it's not breaking out. And we could have said that. Actually, in a way, yesterday we saw that large move on the way up, but it kind of left everyone wondering, because the prior 3 days before yesterday, the market was selling off from the day's high, and it looked like perhaps, there is maybe a bit of a pullback coming, and then you had that sharp up move higher. But today there is no follow through again on the way up, right? So one way or the other, there is no clear kind of direction which is emerging at what the market wants to do at these levels, which is pretty much all-time highs. PSU banks, I think, if you want to pick out one sector, is that, again, that space. The index is up another 2%. SBI is the big gainer there. But there are so many others, Canada Bank and a multitude of other. We'll discuss this in some detail. And of course, there are individual movers. Trent should be mentioned. Look at Delta Corp, which is up 9%. Look at IEX. So its results and other news flow, but it's showing up, and stocks are moving, single stocks moving in a very large way based on news flow and earnings at this point in time. So, 20 points, 22 points on an index which is almost at about 22,000 or so. Arima.
Well, IT's on the back foot today. So the Nifty IT index is down nearly 1%. Cognizant's guidance for the next quarter is fairly modest, and that's just taken the sheen away from the IT stocks. So you've got names like TCS, Infosys, LTI, Mindtree, Tech Mahindra, all under pressure. HDFC Bank is having another down day. That heavyweight has lost nearly 1%. On the gaining side, though, you've got State Bank of India topping the charts, a 3.5% rally over there. And you also have HDFC Life seeing buying for the second day in a row. And a couple of these cement names, Ultratech Cement and Grasim, are seeing buying. But, I think the action is all in the mid-cap space. The mid-cap index itself is outperforming today.
Yeah, absolutely. We've got a very healthy advance decline ratio. Over 1,300 stocks advancing, just about 900 declining. And just some more interesting stories. We've discussed Trent. The numbers have blown past expectations. And this is, I don't know how many consecutive quarters of stupendous performance from Trent. And we'll talk about that as we go along. But that's one stock that's up about 17%. There's Zaggle, for instance. The market has loved whatever it's heard from the company in the third quarter. That's Trent for you. There's Zaggle. Just a word, by the way, on the move on Delta that Prashant referred to. Now, I'm not sure what the excitement is, because our colleague Timsy has been talking about a move perhaps on online gaming, where the government is, and there's no talk of a rollback as yet, but the government seems to be deliberating and discussing whether it wants to forge ahead with those tax demands, because they're running into several thousand crores, 20,000 crores per company basis. So Delta, remember, the issue with GST here is in the casino revenue. This is not online gaming, but maybe the market's kind of reading 2 and 2.
To that point, I think they have a online gaming business as well, and Delta claims they're the number one in online gaming. So I think they are impacted. And Delta, so actually, we don't know the exact, in terms of how it's going to be, it's going to play out. We'll discuss more with Mangalam in a bit from now. But they have an online large, I think it's called some Adda. It's essentially, and they claim that they are number one or one of the top players.
So at least maybe some relief on a part of their business, though of course for casinos, I mean, it's still 28% on the full value of chips. So there's, I mean, let's just put that out, for clarity as well.
And the other point, Surbhi, is this doesn't do anything on prospective basis. This is all retrospective.
This is retrospective demand.
So they got a demand for 23,000 crores.
Delta, yeah.
Delta. So if they're going to roll it back, they'll probably, the matter will lie low. They will not contest it vigorously, and it'll just eventually. I mean, if that's the route, most likely these things go because they can't withdraw it, and we've seen this with other cases in the past as well. So, I think it's a developing story, and we'll need eventually management inputs to understand how this will play out.
Absolutely. Yeah. Just one more stock, since we're talking about a lot of these big newsmakers today. Paytm, we've got a 10% up circuit once again, but it still pales in comparison with the kind of value destruction that happened over the last 1 week or so. But for what it's worth, Paytm also on a circuit. Well, I guess we can get started and straight away get to our technical expert, talk about the kind of bets that you can place in the last 1 hour. We've got Rahul Sharma of JM Financial with us for exactly that. Good afternoon, Rahul. So what do you make of things? Any trades on the index or about individual stocks?
Yeah, very good afternoon. So, index, like you rightly summarized, it is very range bound, and the best thing to do is take stock specific bets. Now, one breakout that we have today is in Canfin Homes. Big built up on the derivative side. We have multi-month resistance being taken out. So last time we saw these prices was way back in July 23, and now we feel that the stock is ready to shift gears. So similar patterns we've seen stocks moving up by 20, 25, 30% as well. We feel that on an immediate basis, one can expect 950 on the upside, but structurally this seems that it has got long legs and the stock can change orbits from here. So Canfin Homes remains our top pick for a trading target of 950 in the next 10 to 15 trading sessions. It can be bought at these prices, stop loss placed at around 820. And on the large cap side, one can look at the realty space where DLF looks very promising. It has given a breakout today, and it seems like 875 is very much on the cards. Realty index has been very resilient in this entire run up, and now after the recent consolidation, it seems like it is ready to flare up once again.
Rahul, thank you very much for those ideas. Let's get you the big story of the day, and that's on online gaming companies, where sources tell CNBC-TV18 that online gaming companies could get a breather as the government is likely to soften its stance on the GST demand notices. Timsy, who's been tracking that story closely, joins in. Timsy.
Well, sources are indicating to us that the government is likely to soften its stand on the retrospective GST demand notices that was sent to online gaming companies. Government has realized, or there's a sort of a realization within the corridors of North Block, that the existential issue of gaming companies, that if they have to pay GST demands that were raised between July 17 till March 23, are they realistic or not? Also, what we are given to learn is that the government is likely to have sought a legal opinion on what could be a way out of the tussle with the online gaming companies that the government is facing currently. And it sees some merit in the argument of the companies that a company cannot pay an unrealistic demand which is as high as several thousand crore rupees. Remember, the matter related to GST demand on online gaming companies is being heard in Supreme Court. An SLP has been filed by the government against the Karnataka High Court order in the Gamescraft matter, and all the cases pertaining this particular issue from various state high courts have been now clubbed under this particular matter. And to be precise, what is the quantum which is at stake? Well, online real money gaming companies have received 71 show cause notices worth 1,12,332 crore rupees in FY23 and 24. And government had challenged this particular Karnataka High Court order, which was pertaining to the 21,000 crore rupees demand just in the case of Gamescraft alone, where Karnataka High Court had quashed this demand. So let's see what happens in the court, how the tussle between the government and the companies actually turn out to be, and what is the final outcome. But yes, as of now, some softening of stand is visible. Back to you.
Thank you very much for that. That's the important story. But how will it impact a stock like Delta Corp? Mangalam joins in with the details. Mangalam.
Well, there are two things to look at in Delta Corp. You know, one of the stories with regards to GST is this the show cause notice that has been come from various states. And the second one is the GST rate itself. Now, if you notice the Delta Corp stock price, before all these issues started, the stock price was close to around 250. And, there was a big decline from 250 to 180. That was on the day where the GST Council recommended casino, horse racing and online gaming to be taxed at a uniform rate of 28%. And this tax would be applicable on the face value of the chips purchased in case of casinos. And that caused a big business impact to Delta Corp. Has that problem been solved, or do we have any visibility there? Turns out not. Where is it that we have some sort of relief, as Tim C is putting out? It is basically the GST show cause notice that has come in from, the West Bengal High Court, the Madras High Court as well, which was close to around 24,000 odd crores, for which the company was already not provisioning or providing anything because they believed they had a strong legal case for them to, not pay any of this. And as a result of which, the management here joined us post the third quarter and said that the GST show cause hearing would be next month, and all claims, like Tim C pointed out, would be clubbed together, and lawyers believe that there is no need to provide for this. So one of the problems of the company seems like it is being solved, but that's not the bigger problem. The bigger problem is that of GST tax rates itself, and that making the business itself unfavorable. Let's see whether there is any relief on that front or not, but for that there is no visibility. Yes, the stock is understandably moving higher, but also be mindful of the fact that open interest activity in the F&O space suggests that it may go into F&O ban. So while there is a relief and the stock is moved back to 150, remember the big reason why it fell from 250 to 180 was the GST tax rate and not these claims.
Okay, all right. Mangalam, thanks very much for clarifying that. Yeah, so market's been very quick to jump, but we don't know how this plays out because that, Mangalam, if you're there, the tax demand that Delta was served was around 23,000 crores, right?
Between 23 and 24,000 crores, if you club all the claims that were made together.
Now, we don't know how much of this demand dealt with casino, which is where there's no change. And Tim C is telling us that the deliberations are more with respect to online gaming, real money online gaming, and not with respect to the revenue that has been earned on casino. So we don't have that breakup in that tax demand that Delta was served with. Thank you so much. And it's important to keep some of these things in mind. Let's get in Prakash Diwan. He's joining us on this leg of the show. Prakash, I don't know whether you go to any of Delta's casinos or not, but the market's getting very hopeful that here's a beaten down stock. And maybe if there's some relief on these gigantic tax notices, then it could be good news. But I don't know, from an investment standpoint, is this a level to start looking at Delta all over again, or is it still too soon?
Good afternoon, Survi. So, I do have a lot of temptations in my neighborhood, being right in the middle of where all these casinos are anchored. But, I think you need to look at the Delta journey from a slightly different perspective. And, if you ask people in the trade, whether it's, Delton or whether it's Big Daddy or whether it's some of the other guys like Majestic and all of them have lobbied to get one thing very clear. Of course, the rest of them are unlisted, so we really don't get to, evaluate what's happening out there. But as a trade, what's happening is there's a change in what they're treating as income and profits, okay, when they give you the chips as a user, as a consumer. So there is a little bit of a change in the way the GST, even at this high elevated rate, gets to impact their revenue proceeds. And to be honest, it's just an impact which is about 5.4% if you get to calculate the change that's happened in the revenue treatment. Which means that Delta is not going to be, apart from the fact that they would have to cough up this huge 23,000 crores plus penalties or dues that are outstanding according to the GST regime. Apart from that, going forward, there's nothing which will probably slow down the kind of growth that they can potentially pave out. And the other thing is that some of the expansion that is on the cards with possibly the Olympics being held in India, there will be a lot of this thing. You could have a potential gift city approval to set up some sort of casinos or equivalent norms. So there can be a very significant shift in the market itself. And that means that Delta could probably make a comeback, being one of the foremost plays within the listed space. So I think it's more to do with that. There is bottom fishing that's happening in anticipation of some of the change in stance, rather than just this gaming thing part. Because the gaming, the Adda 24 thing which they have, which is a gaming vertical, is not yet very large in terms of contribution, and hence the liabilities also are relatively lower.
Okay. All right, got that. But Mangalam's still with us. Mangalam's tracking all the happening stocks this afternoon, it seems. Mangalam, look at Trent go. One more blowout quarter?
One more blowout quarter. In fact, in the last 6 months itself, the stock has doubled, and that's not all. It was never trading cheap, but in the last 5 years or so, it has moved 10 times. So that's telling you about the scale at which the company is growing. And at a time when everyone's struggling for growth in the consumer space, the company has posted revenue growth of 50% year on year. A retail company, when it grows revenue at 50%, obviously operating leverage plays out. The EBITDA has doubled, and the net profit has jumped to 140% itself. So across all estimates, which were on a higher level, the company has gone ahead and beat them. And that's reflecting in the stock price move that we're seeing. And that's not all. The big pivot for Trent happened when they moved to expanding Zudio formats. And in this quarter as well, that continues. They've added 50 Zudio stores as against just 5 West Side stores. And like-for-like growth for the company this time around has been 10%. Gross margin profile has been maintained for both the companies. And importantly, just looking at the trends for Trent, FY21, their revenue was close to 2,600 crores. First 9 months of this year, the revenues are close to 10,000 crores. Similar with the profitability, it was a loss-making company, a loss of 200 crores in FY21. But now as we speak, the loss has crossed, the profit has crossed 766 crores. The big drivers for them is that the company is not only stopping at Zudio, they are evaluating all other formats for growth as well. And some of them include the likes of Star, Samo and Utsa. Not particularly cheap at 89 times FY25 earnings, but these are analyst estimates which the company has managed to beat every time. So we may see some upgrades coming in on Trent tomorrow as well.
89 times forward multiple. That's massive, right, for a company this size. Mangalam, thank you very much for that. Prakash, can you justify buying Trent at these levels and these valuations?
Rima, absolutely not. While it's a great model, and as Mangalam said, Zudio started off as an experiment, as a very smart adjunct to West Side in terms of more affordable price points, but it's now the growth engine. And you look at the kind of square footage that's being built under the Zudio platform, and it's significantly large. It's not just the 50 stores, but the size of the stores has gone up by about 1.8 times. And for somebody like me, I don't know if Surbi recalls when we were celebrating 17 years of CNBC in 2017, whereabouts, where there was a very clear, we chosen this at about 185 bucks as one of the picks. And it's been about 20x from there in just these, 8 years. But the reason is that the market share for most of these large format and mid format stores is grown significantly at the cost of the small mom and pop store. So that's where the market share has built in without too much of cost of sales going up, A&P costs going up. So all of that is translated into very significant margins that keep beating expectations, because the conventional way to look at a Shoppers Stop or an ABFRL or all the similar players in that genre has been to look at what they could do incrementally, whereas Zudio came in, changed everything. Westside has absolutely gone on the M&S model. So it's got an omni-channel presence, which is so significant. So, I think what you need to look at is that it's about getting the right niche and then growing it very rapidly. So that's what they've done. But 90 times FY25 is definitely something which makes it very vulnerable. In case there's some sort of a softness in the market for these size of company, the size companies, there could be some sort of a sell-off, and you'll have some very, very aggressive profit booking that could bring things down. But of course, the growth, not taking away the fact that the growth would continue, but the valuations are definitely not very comfortable.
All right. That's Trent. By the way, our colleague Hormuz points out that volumes on Trent are the highest since March of 2021. Prakash, we leave it there. Thank you very much for your time. It's always a pleasure having you with us here on CNBC-TV18. The markets back down to being absolutely flat, so really lacking conviction. We'll take a break, but we'll also tell you that we're excited to announce that CNBC-TV18 is back with the second season of India's largest campaign on gender parity. Join us for the mega launch of the HSBC Presents CNBC-TV18's Future Female Forward, the women's collective with top leaders, influencers, policymakers and trailblazers all under one roof to chart a path towards bridging the gender gap. Live from Delhi on Saturday, 10th of February, 5 p.m. onwards, only on CNBC-TV18.
Welcome back. The mid-cap action is quite, heartening today. Zaggle Prepaid is locked in an upper circuit of about 20%. Strong numbers, 35% revenue growth this quarter. And the company, in an interview with us, also said that 40% growth going ahead could be on the conservative side. They're planning to launch Forex Visa cards too. So that's a stock which is active in trade. PSU banks have been doing well. So IOB is up nearly 14%. Parag Milk reported numbers a while back. That's showing you a gain of about 12-13%. And Paytm, that's another one, up 10%. But Yash is now joining in because Max Financial is higher in trade after IRDAI approves the Axis Bank Max Life deal. Yash, fill us in with the details.
Well, Rima, the company also reported its third quarter results post-market yesterday. The numbers were weak, missed estimates on all parameters as compared to CNBC-TV18 poll. But the move that you see on the stock today for 4.5% higher is solely because of that big announcement which the company made on receiving the insurance regulator's approval when it comes to Axis Bank Max Life deal. As far as the transaction is concerned, Axis Bank will acquire another 6% stake in Max Life Insurance. Now, this will take the total stake held by Axis entities in Max Life Insurance to nearly 19%. They already had about 13%, acquiring more 6%, taking it to 19%. As far as the transaction is concerned, 14.25 crore shares to be issued from Max Life's side to Axis Bank for an infusion of 1,612 crore rupees into the company. Now, this transaction is a big positive for both Max Financial Services as well as the Max Life Insurance entity, the life insurance subsidiary, because of 4 reasons. One is that the solvency after the fund infusion of about 1,600 crore from Axis Bank, the solvency for Max Life will go up by about 39%. Max Life will also get growth capital for the next 18 to 20 months. It will get a strong distributor in the form of Axis Bank. And finally, this deal happens at a much higher valuation as compared to the first tranche of the this particular transaction, where the first tranche happened at just a valuation of about 6,600 crore rupees, whereas this one happens at a valuation of 26,886 crore rupees.
All right, Yash, thank you very much for that. The Max stock is the one which is has been in focus. It was up about 6.5 in the morning. It's cooled off a little bit since then. Look at Delta. It was limit up, circuit up 9.9 for a few minutes. Now it's opened up. It's part of the F&O as well. F&O list as well. It's up 12% now. So a fresh leg higher over the last 5 minutes or so of trade. Abhiram Eliswarupu is head of India equity at BNP Paribas India. Abhiram, good to have you with us here. Thanks very much for your time. I mean, large stock moves, based on news or otherwise. I don't know if you have coverage on Trent, Abhiram, or if you can comment, and if you looked at the numbers, etc. Stock's not cheap, depending on what estimates you look at. On F525, it trades anywhere between 80 to 100 times earnings. Any thoughts?
Yeah. Thank you for having me, Prashant. Unfortunately, we do not have coverage of the name, but I was just looking at some of the numbers being reported by consumers overall. And when you do have one or two companies surprise positively, I think valuation is obviously the second consideration after that. Once companies have reported good, strong growth, they form an exclusive club in the sense that, by and large, if you see this entire result season, the overall consumer pack is disappointed. So I'm not surprised if you see one or two stocks, shoot up because the results are good.
Abhiram, the bet that you had spoken about earlier is Affluent India. So what would come under that category? Any new additions that you would like to talk about?
In terms of Affluent India, to be fair, that theme has been playing out even now. So, I recall talking about this a couple of years ago when our research team put out this report. But since then, actually, more categories have been coming in. The original, thought was that investors should consider, four-wheelers and jewelry and more consumer-oriented names. But since then, if you see the basket of what Affluent India consumes, it's expanded. For example, insurance is one of those. Financial products, by and large, fit that bill. And so, therefore, I think overall the basket has expanded to beyond consumers to include financials overall, and maybe even consumer-oriented tech names and so on and so forth. So, overall, I think that theme is here to stay.
Could you elaborate a little bit more on these consumer-oriented tech names which fall in this basket?
Well, I'll have to say that overall, bear in mind that there's A lot of new IPOs coming in, a lot of new companies have come to the market. I won't go into the specifics of these, but if you see this come across the board, starting from financials to consumer, to jewelry, to online oriented companies and so on, all of these are now part of that basket.
Okay, so that's as far as consumption is concerned. Abhiram, good to have you on the show this afternoon. What thought on financials, given all the volatility that's taking shape? On one hand, there's obviously this issue of margins and the fight for deposits with large banks. How have you read all the commentary that we've got at the end of Q3, and what are you doing here?
Well, I think that a couple of things to bear in mind. First is I think the story around margin pressures is largely gone, at least at the NIM level. So that's really not the concern for investors. I think what the focus now is on continued growth rate, and I think that is still pretty strong across the board, you would have to say. But what investors are now kind of considering is credit cost normalizing. I mean, they've been low for a while. And some banks that did report results recently have talked about that starting to pick up a little bit. So maybe that's getting into the estimates from here on. But if you see the third factor, which is valuations, they're still quite favorable across the board. I mean, financials haven't performed very well, at least the large banks and the large cap financials overall. So I think that there is still quite a lot of value. And so I think that given that there's not a whole lot in the market where you can find value, investors will probably start looking at financials a bit more deeply from now on.
Public, private, and you're talking about private ones, Abhiram?
Well, private ones, obviously, at the end of the day, they do form a significant portion of the index. And the index as a whole having to move up also entails private banks being part of that. That said, if you see PSU results across this season, they've also been quite heartening, to be honest. So, it's not just a call about private versus public, but more a bottom-up call about which companies have been able to beat estimates and where are valuations more favorable.
So which ones are you pushing, Abhiram? People will be perfectly owning things which don't push up the index as long as those stocks go up. It doesn't matter.
Yeah, no,
so what are you
that's
pushing?
Quite true. That we've been talking for a while about. Of course, we did say about financials even the last time we were here, but I still think that there is quite a lot of value in the large cap banks. They haven't really performed as much as I would have expected them to, and so I think if I had to really put my my eggs in a particular basket, it'd probably be large private banks, just for the fact that they haven't performed. And I frankly think that the difference in fundamentals between those that have performed and that have not performed is not as much as the market thinks.
And you're saying investors are no longer very worried about margin compression on these large banks from here on?
No, I think at the NIM level, probably the concern is maybe for one more quarter, but that's kind of been well flagged by banks also. So I don't think that is really the issue. The concern is really about, at the end of the day, when the sector has not performed, people will obviously have a lot of questions to ask. But I think that once stocks start to move up, and I guess that'll happen with further results that come, and then the story starts to become a little bit more, fulfilling in that sense.
Okay. And Abhiram, non-banks, what do you like at the moment? Non-bank financials.
Non-bank financials, overall, the larger names. And to be fair, many of them have actually done quite well, but we think that there is still more juice because overall demand for credit is quite strong still. And we've not really seen any major issues around credit quality and so on. So I think overall, diversified financials is a place that we still continue to like. And amongst them, our usual preference is for the larger names because it's probably a little easier to analyze those and kind of spot any red flags and so on and so forth. So overall but kind of expanding that argument a little bit more, over from a long-term perspective, we still like the insurance theme and more private insurance here because not only is that sector kind of consolidating towards the top one or two players, but more so that it very much fits the affluent theme that we mentioned earlier.
You were also bullish on defense and railways, if I remember correctly, in the entire CAPEX theme. Are you still riding it? Because from the last time we've spoken, stocks have only gone up.
Yeah, I mean, when stocks start to go up, you start to get a bit more concerned about how much of juice is still left. So if I take the overall capex theme and the basket, I think where really there seems to be more juice left, it's probably on the power side, maybe the transmission side. Those are the areas where obviously there is a lot of thrust from a long-term perspective by the government, by private companies, and so on. And that seems to be at the margin the place to be within the overall capex area.
All right, Abhiram, we'll leave it there. It's a pleasure having you with us here. Appreciate you joining in and running us through what you make of things right now. The markets is like a traffic light. I mean, blinking red and green, nothing at all. 21,930 is what you have on the index. We'll take a quick commercial break here. Nimesh gets us D Street chatter, what he's picking up, and of course our technical trading ideas in a bit from now. After that, stay with us.
Welcome back. As always, it is time to figure out what the chatter is like from all the dealing rooms. So let's straight away head to Nimesh for exactly that. Nimesh, so what's the sense out there? Lots of individual stock movers catching the eye today.
That's right, Surbi. So again, it's a very choppy and a volatile day of trade. And again, the feedback is that from a flow perspective, the FIs are better sellers. So looks like at these high levels, there is a bit of selling coming in. What is more interesting is a churn in the PSU stocks. I've been saying for the last minute is that there are some signs of profit booking now in the PSU basket. So look at what's happening in today's trade. The PSU bank index is up 2%, which was down 1% yesterday. And there is a profit booking now visible in the oil and gas PSU stock. So again, that's what I mean, that there is a bit of churn now within the PSU stocks as well. The interesting part is that, as you rightly pointed out, a lot of individual names within the broader markets are outperforming. So that trend, largely on bank of the local money, continues. But from a flow perspective, the FIs are better sellers, and now there are clear signs of a bit of churn within the PSU stocks as well.
Okay, that's the overall sense. Nimesh, what about stocks? What chatter have you picked up today?
Well, the first stock on my list today is SBI. That's single-handedly helping the PSU bank index to rally in today's trade, and SBI stands out on very strong buy flows from larger FIs. So that's the overall feedback. But I understand a very leading long-only fund has turned an active buyer in SBI of late, and hence a big up move in that stock in today's trade. So that's the first name. The second name is DLF. Within the real estate stocks today, DLF stands out on very strong buy flow. So expect very high delivery volumes, and looks like some large FIs seems to be active buyers in DLF in today's trade. So that helps the stock to move higher today. The third name is Zomato. The results are tomorrow, so watch out for the numbers. But from a flow perspective, a large selling pressure from a leading long-only fund seems to be largely over now. And at these levels, some bit of domestic mutual funds are active buyers as well. So that's a buzz on Zomato. And the last one is Care Ratings. Within the rating stocks, this is one stock which has moved up off late. And generally the sense I'm getting is some bit of H&A activity is picked up in Care Rating as well, and hence a bit of outperformance in that stock in the last many days.
Okay, Care and Zomato, interesting names there, Nimesh, as always. Thanks very much for that. So those are individual names where there is, action and activity. Well, but what are the trades we can take now for reverse trade when we come back tomorrow? Rahul is here with just that. Rahul, hi. Good afternoon. What do you have?
Yeah, very good afternoon. So two trades to go with into the BTST thing. SBI has closed up with very strong volumes today, and this has been one PSU stock which was due for a breakout. We've seen the smaller PSU names do extremely well. We feel that there is a good possibility of the stock hitting or crossing 700 mark anytime soon. So one can look to buy SBI for BTST and positional as well. Stop loss placed at 660, and for BTST one can expect 690, 685, 690 by tomorrow. The second stock which looks good from a positional perspective is Tata Power. Now this stock has been subdued since a few days now. We've seen such consolidations being taken out on the upside more often than not. And at 395, the risk reward is favorable for fresh longs. One can look to buy with a stop loss of 386. And somewhere around 410 to 415 is where we are expecting the stock to go up to. So both the stocks are buy. One is SBI, second is Tata Power.
Okay, thank you very much for that. The markets are absolutely unchanged. It's a 0.35% move, 0.35 point move on the Nifty right now. And it's not that the global markets have done anything today. Nikkei ended down with a cut of about 0.1%. Hang Seng was down about 0.3%. You had the Kospi, which did well. The Korean markets were higher by 1.3%, but most of Asia ended absolutely flat sideways. And Europe right now too is doing nothing. CAC up 0.1%. The DAX is down 0.1%, while the FTSE is practically unchanged. So as you can see, today has turned out to be a very quiet day across global equity markets. But talking about Tata Consumer, which will be reporting its numbers today, Mangalam joins in with the key expectations. Mangalam.
Well, it's expected to be a good set. Both Tata Consumer and Nestle were expected to, lead the FMCG growth when it came to quarterly performance this time around. And understandably, the stock also is near record high, further aided by the acquisition of Ching's. So revenue growth expectations closer to double digits, 9.5% top line growth. You're looking at a number of 3,800 crores. The EBITDA grows much faster. You're looking at a 21% growth in the operating profit of the company. That would mean margin expansion to the tune of 130 basis points. just under 14.5%. And the net profit optically declines by 4%. The absolute number you're looking at is 350 crores. And that's largely because base quarter had an exceptional gain of nearly 80 crores. The India overall revenue growth seen between 8 to 10%, led by the foods business, which is likely to grow between 10 to 15%. The tea business in India also grows 6 to 8%, led mid by volume, a little by price as well. Nourishco will be the growth driver. 20 to 25% growth is what the company is expecting. In fact, the growth driver for them have been Nourishco, Sampann, as well as Soulful. Important to track the improvement in EBITDA margins of the international business, where the company has been on a bit of a course correction, and also if any commentary that comes by on further synergies that they can extract from the acquisitions of Ching's.
Okay, all right, got that. Thank you very much, Mangalam. So we'll watch out for the Tata Consumer numbers. That's on the earnings side. Speaking of nourishment, the markets will hope that the RBI can nourish sentiment and soothe nerves as well. It's full throttle focus on the RBI policy as we get those announcements in tomorrow. The CNBC-TV18 RBI MPC poll shows that the Reserve Bank is largely expected to leave rates unchanged for the 6th consecutive time. We have Ritu here with all of the key expectations. Ritu, over to you.
Well, thanks for that. I'm going to start with the backdrop because, in this monetary policy, it's coming just a week after the interim budget. There were two positive surprises there. One, that the government stuck to the path of fiscal consolidation, and secondly, it lowered the market borrowing projection for the coming financial year. Growth seems to be holding up. Core inflation seems to have declined to sub 4% kind of levels. The Federal Reserve in the US has ruled out any rate cuts in March. The US economy also seems to have managed a soft landing. So in summary, there's no big reason to move on the rates just yet, cut or hike. And so the street's going to focus on liquidity over rates this time around. And that's because liquidity conditions have remained persistently tight since the last policy. We saw some moderation recently, but how much liquidity can RBI provide and how will it provide that liquidity, whether it is through that VRR route or some other instrument? Any action, any direction on that front is going to be very closely watched. Now, the MPC is expected to leave the repo rate unchanged for the 6th consecutive time, like you said, because there's no real reason to justify a cut at this point of time, with inflation closer to 6% than the 4% target. Now, all of our respondents said that the MPC is going to maintain the policy stance at withdrawal of accommodation, although I must warn, there are some economists that are talking about the fact that there is a very small chance of the stance being changed to neutral, what with the interbank call rates declining to below repo rates. The communication is likely to turn a bit less hawkish because RBI is going to indicate its comfort with the current growth inflation dynamics. 90% of our respondents are expecting the tone to remain kind of even, with some even expecting a dovish tinge. Now, going ahead, when exactly is RBI going to start cutting rates? When we asked our respondents, about 50% are expecting it only in the second quarter of the next financial year, 40% voting for cuts starting the first quarter. Now, if you also look at, what's happening on the macro front, and we asked our respondents, on the CPI, for instance, no changes expected from the 5.4% level. Even the projection for the next few quarters is unlikely to be tinkered with. On the growth front, if you look at the GDP number, 7% is the estimate currently for this year, likely to be left unchanged, but some are expecting that perhaps RBI may align to NSO's projection of 7.3%.
Okay. That's the expectations tomorrow, and I think I suspect one other topic which will be top of mind is going to be Paytm. Of course, not the policy, nothing to do with the policy, but after that RBI action, that's been the big top of mind story, which I think we'll get an opportunity to quiz the RBI about. We'll take a quick commercial break here. More market talk on the other side. Stay tuned. Coming right back.
Welcome back. Here with us on Closing Bell, and the volatility has now led to a little bit of red. The Sensex has just dipped into negative territory. Nifty's completely flattened out. And the day is all about mid-caps and almost only about mid-caps. That's how the trajectory has been. We have Ambrish Baliga joining in. Ambrish, I know that your pick for us today is actually from the consumer space. I think Bata is what you're looking at, though the quarter gone by, I think Bata did not have a very hot quarter. So just tell us the rationale and your thought process around Bata.
See, it's the largest retailer and a leading manufacturer of footwear in India across men's, women, and kids' footwear. I mean, 2 years back, they got into the sneakers segment, targeting the millennials, and this segment is growing well all across. If you look at the distribution network, about 1,500 plus towns and cities are covered, and they have about 1,835 retail stores. And they're expanding into the tier 3, tier 4 through franchisee route. In fact, they are targeted about 500 franchisees by end of FY24, but they've already achieved 509 by December. So I think it should end up at about 600 plus. Q3, like you rightly said, was flat. In fact, the whole of FY24, I expect that to be flat to slightly negative. And due to this, we have already seen the stock underperforming. But if you look at the gross margins in Q3, they've improved by about 120 basis points to about 56%. And if you look at the balance sheet, it's a healthy balance sheet with a decent amount of cash, negative working capital cycle. These are the positive pointers out there. And the input costs have been coming down steadily. And now they have outsourced the warehouse operations. The share of the premium products are moving up. So we should see the margins moving up. And yesterday we had the management commentary, which was, they are decently upbeat on the prospects. So FY25, I think we should see a earnings bounce back. And for FY26, I'm expecting an EPS of about 38. And looking at that, the target price should be 1,900, which is a decent move from here. But one thing is important is one requires patience to hold on to the stock for the next 1 year.
Ambrish, any thoughts on Trent? While the numbers have been solid for the last many quarters, there is rising competition. Now, Reliance has its own brand, Ustar, plus the stock has doubled in the last 6 months. Valuations are prohibitive. So, thoughts on Trent?
Reliance would be a major competitor, not just to Trent, but the others in that space. So from that point of view, looking at the way the stock has moved up, at these levels, I'm finding it a bit expensive. I'll not really venture out and buy fresh at this point of time. But looking at the way the markets are, possibly I'll just hold on if it's there in the portfolio.
Some of the names, right? And I was looking at PSU banks, but look at the Ambrish, IOB, if you can have these intradays up, UCO Bank, Central Bank, these are 20% movers, Ambrish. Any thoughts on any of them?
No, see, at these levels, we really can't discuss valuations because valuations are, extremely high for most of them. But then, like I've been saying, this market is all about momentum. And the stocks, you call it by any name. If there's momentum, people are just buying it left, right, and center. You just look at Yes Bank. Yes Bank was not going anywhere for the last so many years. And just see the move today. And looking at this momentum, I'll not be surprised if if we see Yes Bank at 35, 40 levels. But then, at these levels, it becomes a trader stock, not an investor stock.
PSU banks, are they, they're more expensive than where they were, but the argument given is exactly the opposite, that they are not expensive relative to, I'm not sure about these names, but generally for the larger ones, Canara Bank, State Bank of India, and there's some element of truth to it. Profits have expanded at a faster rate as compared to what valuation expansion is for the larger ones, not these. Yeah.
Absolutely. But then do you expect that sort of expansion going forward? Because, these banks have come from a level where people have written off the banks. Looking at the NPAs, looking at the balance sheet, people have written off the banks. And from there, it has come to rediscovery. So whenever a rediscovery happens for a particular stock or a sector, you see a multi-bagger like out there, and that's already happened. And from here on, expecting the same pace, I think it's going to be a bit difficult because whatever said and done, you need to keep in mind the historical valuations. You can give a premium to that, but then it doesn't just flip completely on the other side.
Ambrish, finally, I'm just tossing this one as a thought in case you've had a look at it. Angel One, we were just looking at the January update that was coming in. Now there's a bit of a debate on whether the kind of growth rates we've seen in the past, whether they can continue or not. But just your thoughts on the stock?
No, I mean, again, just like the banks, this stock or this sector had a rediscovery in the last about 2.5, 3 years. And we've seen extremely good earnings, a good move in those stocks. But from here, expecting either, say, 30-35% sort of a growth year on year, I think it's going to be a bit difficult because we could see some amount of saturation at this point of time. And I'll not be surprised, if you look at, the growth in the demat account and the trading accounts, I think that should flatten out possibly. If you're looking at 2024 as a calendar year, I think it should flatten out by the third or fourth quarter.
Okay, thank you, Ambrish, for joining in. About 3 minutes left for markets to close what's been a very quiet ending. The start was more promising. The markets opened up with strength. The Nifty at one point of time was up more than 100 points, but it erased those morning gains to end absolutely flat. In terms of the broader market action, it only picked up. The mid-cap index, in fact, is virtually ending at the day's high. The mid-cap index is up nearly 400 points. That's a 0.8% gain on the mid-cap index. So buying continued in the mid-cap stocks. Advanced decline ratio in favor of the gaining side. Quick word on the losers. IT on the way down, led by Tech Mahindra. Power Grid under pressure, down 2%. BPCL under pressure. NTPC. So some of these CPSCs were weaker in trade, while HDFC Bank too lost ground. On the gaining side, State Bank of India was the top star, 4% higher. JSW Steel saw buying. Grasim, HDFC Life, Axis Bank counted amongst the big movers today on the way up.
I'll tell you, we had lots of banking and financial movers even beyond the index. Look at IOB. It's a 20% move on the stock as we're closing out for the day. There's Canara Bank, Yes Bank, UCO, again about 20%. And these are massive moves in the last half hour or 40 minutes thereabouts for a lot of these banking names. Punjab and Sindh Bank, Bank of Maharashtra, just go on and on. By the way, Angel One was not the only sort of piece from the market infrastructure side. CDSL, the depository, also had a good session today, 5.5% on the upside. Triveni Turbine, second day running after numbers, 14% up on Triveni. So lots of big movers. And then, of course, the stocks that we've been telling you about, EIH, splendid numbers, so 20%. Trent, anyway, we've discussed enough, 20% over there. Delta Corp hopes that maybe, something kind of eases out on that huge tax demand. So 10-11% there as well. Paytm has had an up circuit today, 10% higher. So big moves coming in on many stocks. Just some red from the result standpoint. Navin Fluorine,